Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Stocks rallying on growing optimism. The U.S. and Iran could be looking to arrange a second round of talks, with President Trump telling Fox Business he sees the war as very close to over. The U.S. says 6 vessels turned around and re-entered an Iranian port as Bloomberg learns Tehran is considering a pause in shipments through the Strait of Hormuz to avoid testing a U.S. blockade. And Lebanon and Israel held their first high-level talks in more than 30 years, but officials downplay hopes for an end to the war with Hezbollah. It's just gone 8 a.m. across the Emirates. I'm Johanna Bersachi in Dubai. While risk-on sentiment in markets prevailing, the handover pretty strong from Asia today, and once again on hopes of a breakthrough, on hopes of a possible diplomatic deal and another round of discussions between the U.S. and Iran at some point later this week. Lots of speculation as to where the venue is going to be. Likelihood it will be once again in Pakistan. But on the back of that, it's been enough to cheer markets to new highs. And as we were speaking about yesterday, many of these indices, including the U.S. index, has fully recuperated the losses that it sustained throughout the course of the war. So once again, green on the screen today, some optimism in markets. Asia Pacific up 1.3% with the handover. S&P futures, take a look at where we're at. Above 7,000 this morning, a key level there, and about 7 basis points higher. And of course, they're not just focused on the geopolitics, but earnings season. We continue to get a lot of these bank earnings coming through. We'll give you a full recap of that later, but essentially the earnings outlook actually still appears to be pretty robust in the US. So that's also one of the elements that's driving the performance. USD not doing a whole lot, but the last couple of days we have seen it slip a little bit on back of the risk-on sentiment. And then Brent, we are lower today, $95, so down a couple of dollars since where we were trading yesterday. And again, just reacting to the headlines and the geopolitical news coming out of the region. But I will just emphasize, as we've been saying, the Strait of Hormuz still remains effectively closed. And overnight, we also had some commentary from the U.S. CENTCOM saying that their blockade has also been successful of ships that have passed through Iranian ports. So more on that in just a moment. Before we do that, let me just show you one of the terminal charts that caught my attention today. And this is to do with all of the hedging activity around oil. And no surprise here, but you can imagine that people have been positioning themselves for an upside, further upside in oil. So been buying coal at the expense of puts. So the skew there, i.e. the price that you would pay for a similar option on the upside is a lot more expensive than it would be on the downside. And there's a risk, obviously, if we start to see oil prices and spot prices fall, that these options will be wrong-footed. So something to think about as we continue to watch the geopolitical developments over here in the region. But essentially what this chart is telling you is that oil traders, at least those positioned in option space, could find themselves on the wrong side of the trade. All right, let's check in also on how markets in Asia are faring. Minmin Low is in Hong Kong for us. And Minmin, another day of green, and it seems as though tech is in the driving seat this morning.
Hey, Jamana, yes, as you said, that oil retracing to $95 a barrel, that has been adding momentum to the Asia trade here. We saw yesterday a very strong close, today a second day of gains here. The TAIEX was already at a record high yesterday, today extending gains, and the Kospi pushing above 6,100 level. And investors seem to be looking past some of the warnings from the BOK governor nominee, who was talking about increased inflation risk and slower growth. And yes, what is driving that momentum has been the Asia tech, the big names like SoftBank, SK Hynix, Samsung is really buoyed by the strong earnings we had seen in the first quarter as well. And just another signal of how investors is really looking past the war. You take a look at this next chart, which shows you the VIX has collapsed back to pre-war levels, and so many levels have been taken out, right? Whether it's the S&P, CSI 300 is very close to pre-war levels as well. You look at commodity prices like copper also picking up to pre-war levels, and here you can see the VIX, even for the Nikkei as well, all collapsing close to normalization now.
Yeah, it's so interesting to track those vol moves as well. And once again, it just tells you that investors seem to be looking past fully now the impacts of the Iran war, but maybe it's a little too soon. We're going to talk more about that with our guest. Now, the US and Iran are looking to arrange a second round of peace talks in the coming days, with one proposal to return to Pakistan. Bloomberg has also learned that Tehran is considering a short-term pause to shipments through the Strait of Hormuz to avoid testing a US blockade. This comes as President Trump tells Fox Business the war might be over soon.
I think it's close to over, yeah. I mean, I view it as very close to over. You know what? If I pulled up stakes right now, it would take them 20 years to rebuild that country. And we're not finished. We'll see what happens. I think they want to make a deal very badly.
Joining me now from Istanbul is Bloomberg's Patrick Sykes, and from Singapore, Bloomberg's Wayland Soon. Patrick, I'm going to start with you. What do we know about the possibility of a second round of these talks?
Morning. Yeah, so Trump has mentioned that they could resume within about 2 days in Pakistan. That, of course, was the venue of the first round of talks over the weekend. I think it's worth saying this would be a much faster timeline for diplomacy than we saw the last time the US and Iran met, before the war, when we were looking at a round of talks every sort of 10 to 14 days. We do also know that other venues are under consideration, so it seems that Pakistan isn't yet a done deal. We don't yet know exactly where that might be, but we did have Switzerland yesterday saying that it was prepared to support the process if necessary. That's important, I think, because Switzerland, Geneva specifically, was one of the venues that these two sides met before. Trump also said overnight that he wasn't thinking of extending the ceasefire. So I think with that, the clock is really ticking down to this time next week when the ceasefire is expected to end. If we don't have a deal in place by that point, then we can expect hostilities to resume.
Wait, let's talk about the Strait. We got an update from CENTCOM about an hour ago, and there they put out a statement saying the blockade of Iranian ports has been fully implemented. What activity are you detecting around the Straits, and what have you seen in terms of developments since the U.S. introduced their blockade 36 hours ago?
Right. So we are moving into day 2 of the blockade, and last night, the U.S. CENTCOM actually put out a statement saying that they have turned back 6 ships back towards the Strait. So this goes to show that they are trying to enforce the blockade, and as we've just seen, they said that it's a success in the first 36 hours since. And I think it's worth noting that this wasn't as hostile as I think many people feared, because we were thinking about the situation in Venezuela where the U.S. enforced a similar blockade, but here we don't see them seizing tankers. Instead, they were being pushed back through the Strait. So that sort of puts a flaw to the sentiment, and from here on out, we can see how Tehran responds. And we still do see some ships going through the Strait, some U.S. sanctioned ones, some legitimate ones, and so far passage appears to be relatively normal, even though it's still pretty down from before the war.
And so what are you going to be watching out for the next few days, Waylon, just in terms of not just the Strait itself, but activity around the Arabian Gulf and the Gulf of Oman?
Exactly. So we've heard from what one of our Tehran sources have told us that Iran might be considering to pause a shipment of its crude and other commodities through the Strait. So that's one thing that we'll be keeping an eye out for, to see whether Iran plans to test the U.S. blockade. And then further out, beyond the Strait, we want to see activity inside the Arabian Sea and also the Gulf of Oman, to see how the U.S. Navy is actually deploying themselves across the water bodies, to see how shipping traffic might be impeded by the U.S. checks on vessels. But so far, traffic still seems to be holding up, again, at lower levels than before.
Patrick, let me come back to you, because Waylon just referenced a Bloomberg scoop from yesterday, which is that Iranian officials have indicated that they're willing to pause shipments through the Strait of Hormuz in anticipation of the second round of discussions. But formally, we haven't had any confirmation from the Iranian side that these talks are going to go ahead. So what are the signals that we're getting from them right now?
Yeah, Iran in general has been much quieter than the US side, or at least than Trump himself on the talks, or the next stage in the talks. All we've really had was the President Pezeshkian saying yesterday that Iran was ready for talks. He himself, of course, is not part of the delegation that would be having them. But I think that story you mentioned, it makes a lot of sense, right? As long as there is a kind of active diplomatic track in play, and as long as we're talking about a next round of talks, Iran would lose a lot in testing the blockade more forthrightly, but it doesn't lose anything in seeing how far diplomacy can go. So Wei-Lu mentioned some of some ships have approached the blockade and ultimately turned back. Things like that could be seen as a test of the blockade. At least we're displaying some kind of resistance. We're not just sitting down and taking this, but ultimately trying to cross it, or perhaps engaging with those US forces would, I think, be a whole other level of escalation, which, as long as there's a diplomatic track available, Iran isn't interested in taking.
Bloomberg's Patrick Sykes in Istanbul and Bloomberg's Wei-Lin Sun joining us from Singapore. Thank you both. Let's continue the conversation now with Ryan Bohl, Senior Middle East and North Africa Analyst at RANE. Ryan, just listening to what my colleagues were saying there, we obviously have not yet got confirmation that these talks are going ahead, but the U.S. side are painting a picture of keenness almost to get this done. And even J.D. Vance a couple of days ago suggested that the ball is in Iran's court now as to whether they want to have a second round of discussions. How should we read this sort of appetite to continue with the conversations out of the U.S.? And should we go far as extrapolating to think that maybe President Trump does want this war to be over soon?
Well, we can think of it in two ways. First, I think we are seeing a strategic shift that may be temporary, but that the United States wants to focus on economic pressure on the Iranians, bring them to the table, get some sort of grand bargain, as Vance was talking about earlier today, from them in some capacity. Now, what the details of a grand bargain that would be acceptable to the Americans, that's not entirely clear, but we certainly know what Washington is demanding. On the other hand, it is possible that in a few months, we look back at this moment as the time in which America's political will to continue to use military force against the Iranians essentially broke. It's not clear yet that President Trump has been willing to accept the notable political constraints on a continued campaign, but certainly those forces are at play. His opinion polls are collapsing. His own base is splitting over this. He's coming under a great deal of criticism from former allies. So there's a lot of good reasons to believe that he's starting to listen to that idea that maybe America's political will simply isn't there for an extended military campaign, but an economic one, he might get a few weeks out of that.
Yeah, it's interesting that you bring that up. And, you can't talk about the economic pressure without talking about the developments on the Strait, with CENTCOM this morning describing the first 36 hours of the blockade as being successful. How does that set things up into a second potential round of negotiations? Is it likely then that the U.S. will be successful in getting Iran to make more concessions because they've wrested back control of the Straits?
Well, I think it's more likely to be successful in just getting those next round of talks going, because Iran's strategy is also changing from military retaliation to reconstruction and economic survival. It needs some sort of path in the medium and long term to repair all of the war damage. Now, the fastest path is normalizing the Strait of Hormuz in some capacity. Now, they can do that, of course, by setting up their toll system and extracting tolls from ships that are passing by. That's one way for them to earn some of that hard currency that they desperately need. But they could also trade away some of their influence over Hormuz in exchange for sanctions relief or loosening of restrictions on Iranian exports. So I think the United States is signaling that it's willing to keep going with that economic pressure as a leverage point while moving away from the military pressure that was so politically disastrous here in the United States. And more importantly, both sides, I think, are signaling that they want to move away from a supply destruction escalation ladder. The U.S. doesn't want to destroy Iran's energy supplies at the moment, and the Iranians don't want to do so within the Gulf. And that is, overall, probably the most positive thing that's come out of the past few days.
So the president has spoken to plenty of journalists. His latest, I think he was speaking to a journalist from ABC, and he said they really do have a different regime now, no matter what. We took out the radicals. Does that match up with the reality on the ground?
No, I don't think so. This is a more hardline regime than was there before, but it is also a new group of leaders, and their own internal balance of power is probably not set yet. It'll probably take months or even years for the old establishment's equilibrium to return to Tehran, but they are very much aware of the strategic bind that they are in. They could continue to carry out aggressive attacks against the GCC and Israel and U.S. military forces, but in doing so, they risk hardening America's political resolve to carry out a more extended campaign, including possible ground invasions. So it made sense for the Iranians to accept at least a temporary ceasefire and let the Americans make the next move. They're forced into this reactionary position that they can stay in for at least a few weeks, maybe a few months. But again, they need to find some path towards reconstruction in some capacity. Now, whether or not that path goes through the diplomatic track or return to military pressure, that remains to be seen. So we're not out of the woods for conflict yet, but we do know what both sides now want out of one another, at least in the broad sense.
Yeah, and we haven't even spoken about the nuclear file yet, which is the nexus of all of this. New York Times reporting, I'm sure you saw it yesterday, about the various discrepancies over the suspension, the time period of uranium enrichment that Iran are asking for versus what US are demanding out of Iran. I mean, when you look ahead, if there is some form of a breakthrough, is it likely that it's just going to be some form of a repackaged version of the JCPOA?
That's certainly on the table, that it is something with limiting the uranium enrichment for the Iranians, making more thorough inspections. That certainly could happen, and I consider it part of the cone of possibilities going forward. But I also consider it going back to the status quo ante, where there is no resolution on the nuclear file, and it's simply kicked down the road because now Hormuz is the more pressing issue, especially from the world economic standpoint, since every day those tankers don't go out is yet another dent in the global economic outlook. So it is entirely possible that they are able to, in these next round of talks, make some progress towards Hormuz and then make some broad pledges about how they want to make progress on the nuclear file. But the nuclear file is so complicated, and previous rounds of negotiations have always taken months, even years to achieve progress. I wouldn't expect a quick breakthrough there. I would expect instead kicking the can down the road and then waiting to see whether or not Trump is willing to accept that as part of his legacy, or if he starts listening to the Israelis again, who believe more military pressure is needed on the Iranians to force them to give up that program much faster.
Ryan, always good to chat to you. Thank you so much for coming on. Ryan Bohl, Senior Middle East and North Africa Analyst at RANE. Now, let's talk about markets. Asian stocks have been boosted by optimism over a push for renewed U.S.-Iran talks. This is even as a U.S. blockade in the Strait of Hormuz deepens a global energy crisis. Joining us now is Chief Middle East and APAC Investment Strategist at BlackRock Investment Institute, Ben Powell. Ben, good to have you with us. I'm actually going to start with the comment that Ryan Bohl, our prior guest, ended his observations with, which is that we may be in a situation where, as it pertains to the nuclear file or these negotiations, Iran keep kicking the can down the road. What does that mean for the region in terms of, this big question mark about uncertainty and where all of this is headed? The longer, presumably, these negotiations go on for, the longer we're going to be in for a period of uncertainty.
Good morning. Yeah, I think that's right. So I think as we all live through this, I'm here in Abu Dhabi, by the way, so as we all live through this, it seems to me there are kind of the very important short-term news flow and implications, which is obviously extremely important for markets and life more generally. But then there are also, I think, profound longer-term consequences, which are going to be realized even if we get peace very, very soon. So this speaks to the need for a more self-reliant approach, to use a Chinese phrase, And I think that's going to be in evidence across the GCC, as I guess everyone all over the world, sadly, is less able to rely on globalization, trading partners, and so forth. So I think the consequences of this over the longer term very likely to be here in the GCC and more broadly a determination to be more self-reliant looking forward.
Yeah, and which elements of the market do you think have the potential to sort of snap back quickly, which is what we're witnessing with some elements, versus those that will take more time to work through the implications of this, number one, prolonged war, but two, the ongoing secondary effects of the war, even when the war is over?
Yeah, it's really quite an astonishing time in markets. So the Nasdaq up 10 days in a row. That's the longest winning streak for 5 years. Seems like it might be up again today. So we've got this amazing, it seems to me, clash between the world of atoms and the world of electrons. So the world of atoms, the molecules are not flowing through the Strait, and that's extremely inconvenient for the global economy, to say the least. And yet, the world of electrons, the AI super boom, continues. When we look at markets, ultimately, there's a lot of complexity, but ultimately, we are using our dollars to buy earnings. And when you look at the markets through the prism of earnings, they look pretty good, actually. So we've seen an amazing de-rating of the AI and tech space more broadly over the last several months. And it seems like now the market is effectively, I don't want to say ignoring the Middle East situation. I don't think that's right. The positive AI story is just so overwhelming that that's, I guess, enough to drive US and certain parts of the EM forward. So that's why we at BlackRock, we have upgraded our view on both US and emerging market stocks to overweight earlier this week.
Interesting. Why the change in sentiment towards AI? It wasn't that long ago. Well, I mean, I guess 2 months now since before the war started, that people were turning a lot more cautious about the prospect for AI implementation, getting particularly nervous about the disruptive element to certain parts of the economy. Why now the change in heart?
Yeah, look, so I think it's all very well being bullish AI. I'm bullish AI for what that's worth, but we need to be much more specific on that, both in the positive and the negative. So to your point, Joanna, the market, I guess for whatever reason, woke up to the reality that AI is going to be disruptive, and we had the so-called SaaS apocalypse. That's fine, but there are also clearly some very positive implications at the heart of the chip stack. We're seeing TSMC report later today, so they're really at the heart. Let's see what they say. But it still seems like the demand for intelligence is extremely high. So these concerns, they're reasonable concerns and questions. Are we seeing a bubble? Is there any evidence of a demand slowdown? No. In fact, the demand continues to surprise positively. So that's still the truth, right? That's still the facts as we sit here today. And markets are, I guess, wrestling with this very, very complicated situation. But the dominance of the AI theme, and more than a theme, again, earnings, right? Let's keep it real and focus on cash money. The dominance of that at the earnings level continues to be something like unignorable.
One last question I want to bring back to you, and we haven't spoken about this in a while, tariffs. I thought it was interesting yesterday, the Treasury Secretary Scott Bessent said that Trump's tariffs may be restored by July to the levels that were in place before the Supreme Court struck them down, because they're obviously considering these sectoral tariffs and how they're going to apply them. Once again, is the market perhaps being too complacent about the possibility of these tariff rates going up again in the next few months?
I think this is the world we're in. So look, we at BlackRock wrote a paper back in 2021 called A World Shaped by Supply, where we said the world's going to become much more frictionful, driven by geopolitical events, tariffs, kind of all of that. So I'm not saying we called the specific Middle East issue at the moment. That's an acute, very acute version or episode of what we're talking about. But yes, this structural inefficiency, it's a feature, not a bug, of a world of deglobalization, every country for themselves to some degree. And that's going to persist even when, hopefully soon, we get peace here in the Middle East. But that's just something the markets are going to have to learn to live with. And I think that's going to continue regardless of what happens here at home.
Ben, so good to talk to you. Ben Powell, Chief Middle East and APAC Investment Strategist at BlackRock Investment Institute. Well, as I was just saying, U.S. Treasury Secretary Scott Bessent warned that China's trade surpluses threaten global economic stability. And at an Institute of International Finance IIF event in Washington, he said the world cannot take a China with a $1 trillion surplus.
Focus on global imbalances, because I can tell you, like this slow motion buildup of global imbalances after a lack of sustainable growth is the biggest risk. The world cannot take a China with a $1 trillion trade surplus.
Shares of asset management firms jumped after commentary from BlackRock about private credit and client behavior that TD Cowen flagged as positive. BlackRock CEO Larry Fink says he sees increased demand for private credit from big institutional investors such as insurers, even as retail clients grow skittish. The company took in a net $130 billion of client cash in the first quarter. And Bloomberg has learned that investors are offering to fund Anthropic at a massive valuation of $800 billion or more, which would more than double its previous valuation from earlier this year. The company's value is skyrocketing because its annual revenue jumped to $30 billion from $19 billion in just a few months. Anthropic hasn't yet accepted these new funding offers. And Bloomberg has learned that Pacific Investment Management has bought $400 million of bonds issued by a Blue Owl Capital private credit fund. The deal is a vote of confidence for private credit industry that's been battered by record redemption requests and concerns over valuations, liquidity, and transparency. And a look at equity markets. Things are trading in the green today. Positivity around, well, a couple of things. Positive earnings coming through from the U.S., especially those banks. Citi posting its best profits in 5 years, but then also hopes around a diplomatic breakthrough between Iran and U.S. and another possible meeting this week. And coming up, Israel and Lebanon hold rare face-to-face talks, but major gaps remain. The details next. This is Bloomberg. Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Stocks rallying on growing optimism. The U.S. and Iran could be looking to arrange a second round of talks, with President Trump telling Fox Business he sees the war as very close to over. The U.S. says 6 vessels turned around and re-entered an Iranian port. As Bloomberg learns, Tehran is considering a pause in shipments through the Strait of Hormuz to avoid testing a U.S. blockade. And Lebanon and Israel held their first high-level talks in more than 30 years, but officials downplay hopes for an end to the war with Hezbollah. It's just gone 8:30 a.m. across the Emirates. I'm Joanna Bersetchi in Dubai. Over here in the region, we're very focused on the possibility of a second round of talks between U.S. and Iran, and certainly President Trump is hinting at that. Could happen in the next couple of days, he says, maybe in Pakistan once again, but no full confirmation. However, what I will say, it has been enough to lift and buoy sentiment, as we've been speaking about the last couple of days. Back-to-back gains for U.S. equities, strong gains coming through from Asia-Pacific this morning. MSCI Asia-Pacific up 1.3%. Tech roaring back. We'll get to that in just a moment with Minmin. S&P futures also leaning towards green, better close yesterday. A lot of focus on those bank earnings that came through. Once again, solid, no real red flags to flag on back of exposure to private credit. And despite the volatility in the region and some of the trading losses sustained in certain divisions, the overall picture for the banks was one of health. And so once again, the markets there are focusing on earnings as we continue with the earnings season in the U.S. USD not doing a whole lot today, but has been slipping with this risk on sentiment. And then Brent, take a look at where we're at. $95 the figure, the handle, 95.5 is where we're at, about 2/3% higher, but still a couple of dollars lower than where we were yesterday, and perhaps in reaction to the positive news or the expectation of positive news out of the region as the ceasefire still holds up. And then switching over, speaking of oil, I flagged this earlier, but I thought it was interesting to note, in case we do get a diplomatic resolution, or we do get a breakthrough, or we do get a deal, just pay attention to some of the options activity that's been taking place. Many investors have been positioning for upsides pricing in oil, so have been buying all oil call options versus puts. And you can see there that that white line is where WTI spot is trading, but the blue is a suggestion of how much upside risk investors are taking versus downside. And if we start to see oil prices plunge significantly, then you could easily see a situation where investors are caught very wrong-footed, at least in option space. All right, let's also check in on how markets in Asia are faring. Min Min Lo is in Hong Kong for us. Min Min.
Hey, Jumana, zooming in into Korean markets, which is one of the better performing ones in Asia today. And it looks like investors are brushing past some of the negative headlines we got from the BOK governor nominee, who was warning against higher inflation, slower growth. Import prices came in, showing the biggest jump since 1998. And yet, look at how equities are trading today. Certainly, investors seem to be trading as if the war is already behind us, pushing above 6,100 on the Kospi. The Korean won is trading at the highest in about a month. That's after the National Pension Fund also loosened its guidelines when it comes to FX trading as well. So that provides some support for the won. You flip the board and take a look at what is driving the Korean markets, right? It's been a lot of foreign buying. We are seeing this trend in Japan, in Taiwan as well. You take a look at these Korean and Taiwan ETFs. Taiwan is already at a record high 7 weeks into this war. And I mean, you look at what's happening in the U.S., right, with the NASDAQ notching 10 consecutive days of gains. That's something that is very rare. The last time we saw that was back in 2021. So we're seeing this return of the momentum trade roaring back right now on the back of optimism around those ceasefire hopes. And just last thing to tell you about is that we are seeing huge jumps in some of these quantum-related stocks, almost limit up 30% higher on some of these stocks in South Korea. This is after NVIDIA unveiled its latest open source AI model that is meant to accelerate quantum computing. These are some of the Chinese stocks here also gaining, but to a smaller extent compared to the Korean ones.
Min Min, thank you so much. Min Min Lo in Hong Kong. Now, Israel and Lebanon have held their first high-level talks in more than 30 years in a rare diplomatic step under U.S. mediation. While both sides described the discussions as constructive, U.S. officials played down expectations of a breakthrough, with key differences still unresolved. For more, we're now joined by Bloomberg's UAE Bureau Chief, Dana Khrish. Dana, I note the joint statement that was put out by the U.S. State Department after that meeting happened, and it lasted a couple of hours. What do we understand the items that were discussed in this meeting?
Good morning, Joanna. Yeah. So we know what the Lebanese wanted, right? They wanted a ceasefire, and they went in that meeting, as we speaking to Lebanese officials yesterday, they went into that meeting and they presented their own framework. They wanted to understand, what can Israel give them? What can Israel actually stop the attacks or pause the attacks? And a lot of people said that they could depend on the operations on the ground in South Lebanon if Israel has leverage enough in these battles, especially in the Battle of Bint Jbeir, that is quite significant for Hezbollah. And if they take that village then, or the town actually, then they can maybe offer a ceasefire. But we know that this is also a working level meeting. We didn't expect anything to come out of this meeting. We expected both to present their viewpoints, of course, under the sponsorship of the US. And we saw the Israeli envoy who attended the meeting saying it was a wonderful exchange of ideas. He said that we discovered today that we're on the same side. There wasn't much from Lebanon after that meeting. I think the Lebanese are going to go now and see what Israel presented them. But we also know that Israel rejected that ceasefire before going into that meeting. So the main point for both sides that they're going to be discussing is a ceasefire, when and how that could happen.
Yeah. Okay. So ceasefire of immediate concern. But what would you say are some of the other biggest hurdles to turning this point of discussion, or at least the starting point, the working level discussions, into a longer lasting agreement and possibly even a peace agreement, Anna?
It's definitely Hezbollah, right? And that is also goes back to Iran.
Okay, we seem to have lost connection with Dana. Dana, we'll try to come back to you when we can, but that was Dana giving an overview of those first discussions, direct discussions that took place between Lebanon and Israeli delegations since 1993, spearheaded by the U.S. And of course, it is something that the White House put together in anticipation of the other channel of talks that are taking place around the ceasefire between Iran and U.S. and the region. So very interesting to note that that meeting did take place, and there was a readout from the U.S. State Department. Now, Amos Hochstein, managing partner at TWG Global, has warned that the closure of the Strait of Hormuz has created a new reality for the global economy. The former U.S. Assistant Secretary of State for Energy Resources told Bloomberg that the real cost of energy is surging beyond the price on the trading floor.
Going on 7 weeks, and despite all the comments about the war is about to end, it hasn't ended. We're in a ceasefire, and the Strait of Hormuz is closed. So regardless of what the cause of the war was, what the goals were, we're now all about negotiations about how to open the straits, which was a crisis that we actually did not have before the war. So we've created a crisis, and now we're trying to solve it. In Asia, there are no tankers on the way to Asia with jet fuel, diesel, gasoline, helium gas. None of that is on the way. The straits are fully closed. We have multiple countries in Asia that have gone to 4-day work weeks to conserve energy, where kids have gone back to Zoom school. They haven't done that since COVID. And that's not getting better, regardless of what happens, for several weeks. So I think it's important, as the market clings to every positive, statement about, oh, the war is over, or we're going towards another round of negotiations. The question the market has to ask itself, what if the straits stay closed for another couple of weeks? And the second question has to be asked, the Iranians are going to control the Strait of Hormuz for the foreseeable future. That genie's out of the bottle. That's a risk premium we have to have in the market that we've never had before.
What's a more accurate gauge of how much energy costs? Do I look at Brent futures, or do I look at physical prices being paid right now?
Look, in my 30 years doing this, I've never seen a bigger disparity between the paper value of oil and the physical price of oil. Oil right now is trading at 90. Nobody can find a barrel of Brent for 90. It's not available. You're talking about $140 to $150 to get a barrel. And part of that is because you actually can't get that barrel. Where's it going to come from? The straits are closed. There are no other Brent producers. So I would look at the physical right now if I want to look at impacts in markets. What happens if next week the straits are still closed and airports in Asia start limiting flights? What does that do for economic growth? And how long before that starts affecting Europe and then the United States?
How you mentioned about this stronghold that Iran has on the Strait of Hormuz. What could shake that? I mean, does a U.S. naval blockade do that? I mean, what do you see anything in the horizon that could loosen Iran's grip on this key waterway?
I really don't. In other words, I think Iran has learned through this war that while the nuclear card that they had, that was their leverage against the world, right? If you don't do what I say, I may be crazy enough to go to nuclear weapons, right? That was always the threat. When I was in the White House and I was in the State Department, I think they realized that costs billions of dollars. One $20,000 drone hits one tanker, and we control the whole straits. So I think this is a card they don't want to give up. They're going to control it, even if they open the straits 6 months from now, a year from now, anytime they want a crisis to manufacture a crisis, anytime they want to pick a fight with their neighbors. It's not just a leverage against the United States and the world. Remember, this war will end with a regime that is intact, angry, vengeful, and angry at their neighbors who joined the war. So the Strait of Hormuz is not just a lifeblood for Asia and the rest of the world, it is also the lifeblood of the economies of the Gulf states. And so we are waking up to a new reality that this war ended up with a new geopolitical risk that existed before, but only in theory.
That was Amos, Hochstein, managing partner at TWG Global. Well, coming up, new data from MAGNiTT shows early signs of pressure in MENA venture capital. We'll break it down with the CEO, Bahoshy, next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Johanna Bersachi in Dubai. New data from MAGNiTT suggests MENA venture capital is holding up for now, but the real impact of the Iran war may still be ahead. In the first quarter, deal activity dropped to a 5-year low, while international investor participation also declined, pointing to early signs of selective announcements of cross-border capital deployment. Joining us now to break it down is Bahoshy, CEO of MAGNiTT. Philip, really good to have you with us on the show. Before we talk about the war impact, which again, it's a little early to ascertain, maybe just give us a picture of VC overall activity in Q1. How was the year starting out?
Good morning. Thank you for having me. So we come off the back of a record 2025 for the region, a record amount of capital deployment, a record amount of investor participation from international, and a growing number of M&A transactions. I do caveat that with only 3 months of data, it's very difficult to assess any full impact. But what you did see was that capital grew quarter on quarter compared to Q4. It's almost flat compared to what it was a year ago. But indeed, as the chart highlights here, deal flow did show a 5-year low. Now, before the war even took place, you had Ramadan and Eid, a period which generally tends to be a little bit quieter for announcement and deal activity in March. But as you highlighted and as we've been saying, the true impact of what we're seeing now is likely only to show in the data in 6 to 9 months. And what we're really seeing is that public markets tend to look forwards and are always forwards looking, and private markets are always a little bit lagged and backward looking.
Yeah, and again, before we talk about the expected impact of the war, let me just ask you, what have you picked up in terms of ticket sizes in Q1, Q4 of last year, Q1 of this year? Are we moving towards larger deal sizes, or is the situation one where people are more comfortable committing smaller amounts of capital?
Yeah, interestingly, our data highlights that at least in the first 3 months of the deal flow, which are deals that are 6 to 9 months in the making, even in Q1, that there was beginning to be a shift towards larger ticket size deals and a slight contraction in the total number of transactions. Now, this is very much in line with what we've been seeing from global reporting. Deal transactions from public research like CB Insights have shown actually a 5 to 6 quarter decline in the total number of transactions, but total capital deployment growing in larger later round investment deals, specifically in AI. And here in the region, it is the later stage investments that have grown quarter on quarter, at least in the first 3 months of this year.
Yeah. Phil, what do you think are going to be the longer term drivers for the ultimate success and ongoing success of the regional startup and VC community?
Outside of this conflict, you always look at certain key indicators. Growth of capital is extremely important because it shows that there's continued deployment in the ecosystem, not only at late stage investment, but also across the whole of the funnel at early stage. The second is, and here it's really interesting because it's a bit of a double-edged sword, is international participation of capital into regional venture. As markets mature, you want to continue to see international participants investing into a local ecosystem. UAE, for instance, has 75% of its capital last year that came from international players, whereas Saudi had 35%, but a growing contribution from the international ecosystem. And at large, 50% of capital came from international investors. And finally, a key metric that we'll continue to measure is exits. I think when we spoke just in January, I said one of the few orange or red flags that there are is that we need the liquidity flywheel to kick in. And seeing M&A transactions and IPOs is a healthy metric of the growth of the ecosystem.
Is it fair to say that then, one of the big question marks, and we have no visibility on this yet, but what happens at a macro level with FDI is most certainly going to have an impact on the types of funding and the deals that are going to be translated to later in the year.
Absolutely. I mean, I think it's literally a year since I came when we were talking about the disruption from the tariff conversation last year. And effectively, uncertainty creates basically indecision when it comes to investments, delays and lags in those investments. And so when it comes down to what type of investors are investing, early stage investors, actually, ironically, compared to the data, are always less impacted because they have a 7 to 8 year horizon. When you get to later stage, and as people grew in confidence coming off the back of 2025, you begin to question, will that next investment round come to fruition? Will that exit come to fruition? And will interest rates remain where they are or potentially get rate hike, which means that the cost of capital becomes more expensive? So we published a report at MAGNiTT during the last 3 weeks talking about 5 pressure points that might be impacted given this indecision. And late stage capital is one that is potentially concerning. And then again, as we talked about that international investor appetite, will the international community continue to invest in the region? Our view is that we're extremely bullish, medium to long term, and anyone who's committed capital through funds or boots on the ground, which you've been reporting extensively in the last 12 to 18 months, will continue to see this as an opportunity to double down. But those that are potentially looking from abroad are going to be a little bit more hesitant until there's certainty in what will be the landscape in the region for the next couple of months.
Yeah, I will say boots on the ground have a different connotation during this time. Philip Bahoshy, always good to chat to you. Thank you so much for coming on. Philip Bahoshy, CEO of MAGNiTT. Now for a look at some of the other stories we're following today. Chinese President Xi Jinping met with the Crown Prince of Abu Dhabi to advocate for expanded cooperation in education, aviation, and tourism, while addressing the escalating instability in the Middle East. During the meeting, she introduced 4 proposals aimed at regional peace. The talks came as the Chinese leader warns of a crumbling world order amid the ongoing conflict with Iran. The IMF has downgraded its growth projection for the year after the Iran war triggered a major oil shock. The fund now expects global growth to rise 3.1% this year. That is down from its January forecast of 3.3%. The IMF says its latest estimate assumes the conflict will be relatively short-lived and that energy prices will see only a moderate increase this year.
The closing of the Strait of Hormuz and serious damage to critical energy facilities in the Middle East raise the prospect of a major energy crisis should a durable solution not be found soon. Oil and gas prices have increased sharply, and so have the prices of diesel and jet fuel, fertilizer, aluminum, and helium. With the right policies, including a swift cessation of hostilities and reopening of the Strait of Hormuz, the damage can remain limited.
And Bloomberg has learned that the IMF and Lebanon are in talks for up to $1 billion in fast-track aid to mitigate the impact of the Middle East war. Lebanon is in default on its debt and wouldn't be able to have direct access to the IMF's emergency funds. The money would be earmarked for budget support and humanitarian response. The fund has also sharply cut its growth forecast for the Middle East and North Africa as the Iran war disrupts energy supplies. The IMF now sees the region growing just 1.1% this year, down from nearly 4% previously. Major energy producers, including Iran, Iraq, and Qatar, are expected to contract as damage to infrastructure and the closure of the Strait of Hormuz hit exports. The fund says growth could rebound next year, but only if energy production and transport normalize in the coming months. Saudi Arabia and the UAE are still expected to grow, but at a slower pace, as they rely partly on alternative export routes. Meanwhile, ECB President Christine Lagarde says reaching a settlement to the war is in the best interest of the global economy. In an exclusive interview with Bloomberg, Lagarde also discussed how the prolonged conflict has weighed on her outlook for growth and inflation.
I have seen successful program being completely wiped out by war. So war is, in any circumstances, the worst outcome. If you talk in strict economic terms and the movement of goods and all that, it's the Strait of Hormuz, not being open for shipping and transportation, because you have 20% of gas and oil going through that, as well as the like of ingredients necessary for fertilizers, ingredients necessary for microchips, and what have you, not going through the strait.
So what's the pain threshold for the euro area economy that the ECB would have to act on? Is it inflation at 3-4%, or is it?
Look, we have forecasts for inflation that vary between 2.6, which is the baseline that we have, and a little north of 4%. Based on what I told you earlier, which is see-through, strong, decisive reaction, or somewhere in between, depending on the factors that we see, we will adjust, because we will be agile. But one thing for sure is that we will keep our 2%.
Madame Lagarde, how worried are you about the discrepancy between spot and future oil prices, and so potentially tighter markets that we're pricing in?
I think it's the whole dilemma that we have about short-term and medium-term. And the more anxious and worried economic actors are about the resolution of this crisis, the more pressure there will be on the spot market.
How much do you blame the U.S. administration for what's happening to the European economy?
It's not my job to do, blame, to point finger or to associate this or that with blame. I'm more in the hope section myself. And I very much hope that people can sit at the table, can come to their sense, and understand that it will be in the best interest of the global economy, of the people, that a war settlement is reached, and that not just a ceasefire, and that we can navigate through the straits of the world.
ECB President Christine Lagarde speaking exclusively with Bloomberg's Francine Lacroix in Washington. And just a recap of some of the headlines that have come through from the IMF. A downward revision to growth, a downward revision to global growth, a sharp downward revision to some of those key oil exporting countries in the region. And we just spoke about that. And so the question really for markets as you look ahead is, even if there is a second round of discussions this week, how long will the uncertainty and the question of disruption prevail and hang over the outlook, especially for some of these regional economies? So just going to leave you with that question as we head into the European session. Markets aren't doing a whole lot, but a focus will be on earnings once again. That's it for Horizons Middle East and Africa. I'm Johanna Versace in Dubai. Stay with us for Daybreak Europe. This is Bloomberg.